talking about sad stuff. This is going to be the podcast of sadness.
No, it's not going to be podcast sadness. It doesn't matter that some insurance companies are no longer taking applications or for final expense because the final expense market is changing. Nick Frumpkin
It is.
is changing rapidly. I think.
I think actually for the better. Like
I agree.
my opening statements to the side, I actually think it's changing for the better for the most part. I think on the whole, this is all good stuff.
Uh, So I didn't get to watch the video with you, Chris Smith, and Adam Brisson.
I was not on the one with Adam. We could not get our schedules.
Got it.
So like me and Chris did one, and then he and Adam did one because Adam and I could not get our schedules.
Got it. Yeah. So I know you and Chris talked about, is final expense telesales changing?
Yeah, so it's a little bit. It was a little bit of a clickbait title, right?
Well, it
You know,
works.
it's
Yeah.
because
We know YouTube.
that's
Yeah.
what gets people to watch the videos.
Welcome to the
Um,
call, everybody.
yeah. Um, but the title of this should be "Do Clickbait Videos Work?" Um, but it was really talking about the industry reaction on the agent level to the sudden and frankly somewhat unexpected in some respects contraction of insurance carriers from the final expense market
Mhm.
and the speculation the speculation, the knee-jerk reaction amongst a lot of agents, face-to-face agents, that this was because of call centers and the rise of call centers and the very real legitimate rise of call centers. I mean, like, call centers are way bigger now than they were prior to 2020. um, the people that are coming into the industry seem to, by and large, want to come into the industry doing telesales. I want to say probably 3 out of every 5 people that I talk to who reaches out to me because they're looking to come into the industry say that they're looking to come into the industry as a telesales agent. The idea of coming into the industry as a face-to-face agent doesn't even seem to occur to the majority of these people, and that's changed the landscape of the final expense industry in a way that I don't think anybody predicted or was necessarily ready for.
Mhm.
And because of that, I think some carriers were not as well positioned as they possibly could have been to either take advantage of this or protect themselves from this. And they created and developed products and put out products that were designed for a
Rapid expansion.
pre-pandemic. Yeah, they were
Yeah.
designed for a pre-pandemic world and were used in a post-pandemic world.
Mm.
And or they were trying to catch the rising wave, and they didn't understand how many people were coming into the industry and how hurting for money a lot of them were, and how willing to just like do whatever it takes and not necessarily even really be properly trained. And I mean, and it created some activity that carriers were unprepared for, and some of them responded to that poorly, and the poor response to that unexpected change in the agent demographic is what caused many of them to pull out of the industry. It's not actually in my opinion, I don't think it's actually the change in agent demographic that caused these companies to contract out of the industry. It is their response. We'll take Great Western, for example. We don't normally talk about company names, but Great
Sure.
Western put out a statement that laid out very clearly, exactly step by step, what happened and why they got to where they were,
Yep.
which is they saw the shift, they put out a product to take advantage of the shift. They did not like the business that they were getting as a result of this new product. So they changed the rules of how the product could be used to make it more difficult for agents to use it, essentially. And then agents stopped writing it. And so because of the changes that they made, agents stopped using their product. And because agents stopped using their product, their parent company decided their company was no longer profitable and then withdrew them from the marketplace.
Correct.
I mean,
Correct.
and they lay that out very, very, very clearly in their press release. Or maybe it
Yeah.
wasn't a press release, maybe it was a letter to agents. I don't know. But they lay it
Yeah.
very clearly out in their official
A memoir,
whatever. Yeah.
The other question is this. I lost it in a way. It was well spoken. Do you think it's also too because so many carriers saw the opportunity for telesales, and then they got told what to do, how to do it, when to do it, and they just weren't told properly. And so then they got adverse risk because the people that wanted to sell it, the bigger IMOs said, hey, do this and you're going to get a ton of business. Well, then that carrier started getting the niche products or the niche, things and started getting adverse risk. Because if you only write adverse risk for one type of policy, that's where the problems align when you're only getting one specific thing.
I know that that is a thing that some people are saying, and I don't know whether it's true or not because I don't sit on any of these boards. As somebody on Facebook pointed out in response to the video that I did with Chris on the other thing that I do, somebody pointed out like, hey, you guys do not sit on these insurance company board meetings. You are not in the room when these decisions are made. You don't know what these people are looking at and the decisions that they're making. And this is true. I don't.
It's very true.
I can speculate. I can say what I think common sense would be. There's no saying that common sense is ruling the day. But it seems to me that they pay actuaries a whole lot of money to determine how much risk they can take.
Sure.
And they know if they are leaving a market niche open. They know that they're taking insulin-dependent diabetics who have diabetic neuropathy and what that means.
Yep.
They know if they're not. They know if they're taking people who have congestive heart failure and what that means. And they know if they're not.
Mm-hmm.
I cannot imagine that there is a single insurance company out there that would say, yes, we are going to accept congestive heart failure day one with no restrictions as long as they're being treated by a doctor and taking medicine as prescribed. We will accept that with day one coverage and not expect to get just a crap load of people with congestive heart failure.
Yeah.
Like, I don't know how you do that and you don't expect that as a return. And from the one company that I know that actually does that, they expected to get a crap load of people with congestive heart failure as a return and were prepared for it and are happy that they're doing it. But like I feel like the adverse risk selection argument is overstated. I think it probably played a part of it, but I think the larger part of it is not taken rate. I think the much larger part of it is the not taken rate.
Got it.
And there's a cost every time you submit an application, whether the application is approved or not. And there's a cost every time a policy is issued, whether or not the policy is taken.
Correct.
And high not taken rates cut into insurance companies' profit margins.
Correct.
And so if what you're then getting is all you're getting are a whole bunch of policies that are not taken, and then not very many people writing your company at all because they're only willing to give you the garbage products and the garbage prospects in the first place. That's the situation. I was talking to an agent maybe a week ago, maybe not even a week ago. Time is getting a little fluey for me. I've been really busy.
Yeah.
And I was talking to somebody and God, I don't even remember what company it was now, but some company made a change to their rules about advanced commissions. And they said, if your persistency falls below a certain level, and we're going to count your not taken rate in your persistency numbers, and they're the only company that's doing that. But if your persistency falls below a certain threshold, we're not going to terminate you, but we're just going to stop advancing you. And so this person said, well, I guess this is working because anybody who's even a little bit iffy, I'm just not going to send to that company. I don't want to lose my advances. There's something to be said for that. Like, it works. The insurance agents are driven by their wallets,
Yeah.
you know?
Well, I was talking to somebody recently, and I want your take on this too, Nick. What do you think about companies going back to only paying on draft?
I,
It's
I
easier to
think
say
it's
in
a
a position.
really good idea. I think it's a really good idea, and it's going to put a lot of new agents out of business. But I think
Correct.
both of those things are true.
Correct. And it's easier to say it's a good idea when you have, a surplus of cash that you're not, too worried about your
Yeah.
first month. But that's the thing is if you're doing proper business and you're doing on draft when people actually have their money,
Yeah.
you don't want to become a payday loan agent.
Right.
You're writing somebody on the 15th because you got to get paid to pay your house bill. And so you go write two pieces of business knowing the client just has no money, knowing you can't do it.
And I think honestly, the people that sort of thing hurts most, because it hurts new agents. Actually, the people that hurts most are people who are trying to start new agencies.
Mm-hmm.
Because it's going to be harder to find agents to work for your agency. Um, if you are large and you've got direct contracts and you're actually like at an IMO level, then that's probably not that big a deal for you. And it is probably a risk management tool that is good.
Mm-hmm.
Um, uh, um, but smaller agency builders, people who are trying to get something off the ground, in the final expense space are going to be hurting because it is going to be harder for them to find new agents that they can train, and get cash flow positive, and they're going to have to try and find existing agents who are already established who can afford, because it's just going to be harder to get new agents into the industry.
Which
Maybe
brings me
that's a good thing.
my next point. This is something that I've learned. Insurance carriers hate releases.
Yeah.
They hate moving because let's just call it, there's 30 direct contracts to one insurance carrier, right?
Sure.
We'll call it Great Western for now.
Sure.
Right?
Yeah, we've talked about them already. Why not?
There's 30 of them. There's 30 people, agencies that have the direct contract, the top level contract. And if Nick and his agency of 100 agents move from Matthew Murray Insurance 123 and move over to other insurance 123, the insurance carrier has to do a lot of work to move that over.
Yep.
And then guess what? One of the other 29 people go, well, that person really sucks. You need to move over here. Insurance carrier then has to move it, but it all goes to the same nut.
Right.
Right?
Yeah.
Insurance carriers much rather, and they prioritize new agents.
Yep.
To their product.
Yeah.
New appointments, not existing appointments and moving, new appointments to their thing. They prioritize it. But here's the caveat. It costs money. I know it sounds crazy. It costs money for the insurance company to do it.
Yeah.
So if you're an agent, do not go and get a company that you don't plan to write.
Yeah.
Yeah, I don't care what your upline tells you. If they tell you to sign don't do it.
No.
Just go, hey, what are the 5 that I'm going to write the most?
Man, don't even get 5. 5 is too many. If
3 or
you're
4,
new,
3 or 4 maybe.
1. Go pick up one company. Learn to write a company. Start with one.
Get paid first.
Yeah, start making some money. Then maybe add another one. There's no rush. Start with 1, maybe 2, maybe 1 in a GI, right? Like, you're not going to make any money off a GI, but you'll make a little bit of money off a GI.
Sure.
But if you, and this is the other thing, right? Like, if agents were spreading their business around less, and like Best Plan Pro, FEX Toolkit, that kind of stuff is encouraging agents to like get super, super niche with who they send their people to. It's like, dollar slicing. Like, we can, with this product and this carrier, we can save the prospect 50 cents a month. And so instead of writing everybody with the one carrier that you write everybody with, you're writing, well, in this case, carrier A is 50 cents a month more expensive, so I'm going to write carrier B. But now in this case, carrier B is $1 more expensive, so I'm going to go back to carrier A. And in this other case, carrier C is the least expensive company, but it's only by like 5 cents. But let's go with carrier C. And there's not really a lot of difference between any of these carriers, but you've written 3 policies with 3 different carriers for not really any good reason.
Yeah, and your comp doesn't change, and you had to learn 3 different processes.
Yeah. 3 different app processes, 3 different methods of getting paid. Every company, you have now 3 companies who think you are a one app agent instead of having written 3 apps that day. Right?
Yep.
So the carriers don't like you as much as they would if you'd written everything with the one carrier. Your commissions are more difficult to track because they're coming from all over the place. Like, I will tell you, I've been redoing my accounting software. It is a goddamn nightmare to have to track all of the companies that I am trying to track and figure out how much I'm getting paid from every company, because it's actually sort of important that I know how much I'm actually getting paid and not just what they're 1099ing me for. And this is the first year that I've done that.
Can I say that one of my best or favorite times in the insurance business for me was when I was selling a company called GPM.
Sure.
Because when I first went independent, I got GPM. It was a kind of an off niche carrier, if you will. It's not one of the traditional final expenses, but they had a good graded. I wrote a ton of their preferred products, and I wrote some modified. I just wrote the crap out of them. That's all. I learned the product so well, and then I started noticing when things would go modified, and I start writing different carriers. But I can't tell you how much they would prefer when I call to get things done for me.
Yeah.
The underwriting department, because I'd send in 2 or 3 apps a day, and I'd go, "Hey, I'm Matthew Murray. I just want to check on these apps. Is there anything I need to do?" Blah blah blah. And they go, "Nope, you're good. We got it here." And my business would get issue paid. Like, I'd send in an app at 9:00. I was the first in line. My apps were getting done by 10:30, and I was getting a commission statement on what I did the previous day on a paper application the next day.
I promise you, if you are in this industry for long enough and writing a volume of business, at some point, you are going to need something from the carrier that you are writing.
Yes.
They are going to be much more willing to give it to you if you've sent them a lot of business.
Correct.
Especially if it's been good business.
Yes. When you call the carrier rep or the carrier, they say, "What is your agent number? 1, 2, 3, 4, 5." It's going to show everything about you.
Yeah.
How much business you've placed, how much business has fallen off, what your persistency rate is, how much premium, everything. How long ago did you, because if you just call in and go, "I need to get this, this, and this," and it's been 6 months, they're not as in tune to that. Versus when I would call again, GPM, I'd go, "Hey, Michelle," and they go, "Hey, Matthew, how are you?" And I'm like, "I'm screwed up so bad. I missed this, this, and this." Like, we'll send it to you right now.
Right.
Quick. They knew my name, not my number at a certain point. And that is where the secret sauce is in the industry, is learning and knowing the carriers at such a high level that they're reaching out to you. They want to promote you and give you some extra incentives that they don't give it to every agent.
Yeah, and that stuff's a big deal. That stuff is a big deal, and it makes a big difference when you're a new agent. It makes your life easier. And frankly, it makes the insurance carriers' lives easier. So yes, I think there is something to the argument that some people have made that the industry would be better off if everybody was just like, maybe not captive, but acted like they were sort of semi-captive to a single carrier.
Sure.
This is an argument that has been made in the wake of the insurance company contractions. And like, do not get me wrong, these insurance companies did not all contract because of like adverse business selection or bad business being written. Some of them contracted because poor management decisions, and the writing has been on the wall for a very long time. And they've just been badly managed, and and their financials finally dropped far enough that they stopped being able to get business issued.
Sure.
But like we're talking about it because all of this happened kind of all at the same time, and it is not all because of this, right? We don't have 150-year-old companies who have dropped to a C rating overnight because of agents starting to write bad business via telephone app. There's something else going on there. But yeah, it's not great. Like there's but some changes should be made. Yes, absolutely. Agents should be thinking about how the big picture benefits them most. Absolutely. They should be aware of the big picture when they're making decisions. But at the end of the day, the agents should be driven by their own bottom line, and they should be voting with their feet and their dollars and their wallets. And the companies leaving, the thing that I think is actually the most interesting thing to talk about, which is interesting to me, but is not being talked about, so is maybe not all that interesting to everybody else, is the other side of this coin. Like, where are things seemingly going right? Where is there, because of this industry contraction, where is there this new opportunity? And I think it's there. I think it exists. And everybody's all sky is falling, but nobody's talking about the upside. And I think the upside is very real. Let's go to Matthew with the upside. Matthew.
Learn how to sell in the field.
Yes. Oh,
You can almost close at this point if you have a decent presentation. If you're somewhat good, just practice a little bit, you can close at like 70, 80%.
Yeah.
Like easily.
Learn to knock on doors. Learn to knock on doors of old leads.
It's a lost cheap leads. It's a lost art. I'm telling you.
I don't know how it got lost so fast.
Because of the pandemic. I'm telling you.
Yeah, I know. The pandemic screwed everything up.
I'm telling you, knowing I told you this. I mean, I was working on a new lead type, and I hadn't been in the field in a long time, and I was like, screw it. I'm gonna go get high on my own supply before I tell anybody about the lead, right? Booked an appointment. Someone, they didn't answer. I knocked on the next lead's door. They opened up the door, and I went, "Hey, I'm Matthew. You filled out the form on Facebook about the life insurance?" And they're like, "Yep." I'm like, "I'm the guy. Like, I'm gonna come talk to you about it." And I just walk in the door. Like, just learning that skill set from my past transferred so easily. And then guess what? The lady got 5 to 7 phone calls while I was there. And she went, "Ugh, I'm so tired of everybody trying to sell me insurance over the phone."
Yep.
I'm sitting there talking to her about insurance.
Yep.
In front of her.
Yep.
She was so happy that I was there navigating her through the thing, because she's still a senior. The people that we service in the final expense demographic and the Medicare demographic today are not all the way adopted to technology.
Yep.
Yes, Nick and I have talked about these people text more.
Oh, yes.
Like that's for real. Yeah. But they still, there's so much AI, and it's so, AI is hard for someone who's technologically advanced like Nick and I. Yeah. It's weird. It's a new thing. No one really knows. We're pioneering this thing as we go. But the senior community who's retired, who's been sitting the same thing, doesn't know anything. And then they're hearing about this AI on the TV and what it does, and they should be aware of scams, that when someone calls, they don't know what's real or not anymore. And so when you, as an agent that knows how to do this, knocks on their door and go, "I'm an insurance agent," right? You have like their propensity score to get in the door is so much higher right now if you just learn how to knock on a door.
There has never been a better time to be selling face to face.
People want to know what the opportunity is. Oh. Sell insurance in the field.
Yeah, no, for sure. So I think I mentioned this on our last one, but and who knows if these are going up in order or when these even are going up.
This is my promise. This is my promise to you, Nick. if you get this to the drive, my guy is going to have it uploaded tomorrow.
Cool. Awesome. This will be on the drive today. So great. What happened to the other two? We'll
I
talk
don't know.
about that when we're not
It's
recording.
me. It's me. It's me. It's a me problem, not anybody else.
We'll talk about that when we're not recording. But like I mentioned this on the last one, I think. My wife is in the process of getting her CHFC and an RICP, which are like actual
Designations.
advanced financial advisor
Yeah.
certifications. And so she's reading all of these case studies right now. And so like kind of the only thing we talk about is like my business and her case studies. And she was telling me, she was like, she said to me in the car the other day, she was like, so I was just reading this thing and this is lining up with something that you have been saying for a long time. They just did this whole long study post-pandemic of seniors in the marketplace and how like 4 to 1 they would rather have an advisor who would meet with them in person, and that because there are so few people who are actually RICP, which is registered in retirement income certified planners, a retirement income specialist. And she said, they were saying in the course, there's only like 3,000 at the time of the recording, like 9 months ago, um, people who are RICP certified. So they're spread all across America. So if somebody wants to talk to an RICP, odds are they have to do it over the phone. This was actually like hey, you got to learn your phone skills because people aren't going to want to do it this way. And they're probably not going to have a choice because they're not going to be near you. But if you have the ability to build up your local community, you will do so much better, so much faster. And this is like the American College of Finance. This is not like small time stuff. And like 4 to 1 is a pretty dramatic ratio. Like that's a lot. People would prefer to be doing things in person 4 to 1. That's huge. Now you can talk to more people over the phone and you can get numbers on your side over the phone because you have the ability to talk to so many more people. You cannot talk to 30 people in a day trying to do this face to face. It is not possible. I have tried. It's not possible. But you can potentially talk to 30 people over the phone. You can get numbers on your side, but people are going to be happier face to face. People don't want to do these things over the phone. The number one thing that I get told still today when I talk to somebody and I help somebody in person, the number one thing they say is, thank you so much for coming out and talking to me. Everybody just wants to talk to me over the phone. Thank you so much for being somebody who can just come out and talk to me. And I work in a pretty saturated market of agents.
Right. And that's what I mean. Like, Nick is one of the great, I consider him probably the greatest final expense agent of all time. There's a few people that I put in that designation. There's a small group of people that I'd consider to be the GOATs, right? Nick is, in my personal black book of whatever, one of the greater. He's good, but you don't even have to be that good in order to just go out and just literally just talk to the client. I talked with Rusty Westfall. Do you know who that is?
Absolutely.
Rusty Westfall and I did a podcast thing that I do on Thursdays, actually. That's my next call at 5 or 6 o'clock today. And I just told him, like, all I do is I just go out in the house and I sit down with the person and I just chat with them. And eventually insurance comes up. Someone has passed away and they're worried. And then you just happen to be the person that has the solution to their problem.
Yep.
You don't even got to be that good to do it. Now, I'm not proposing that this is the easiest business of all time. This is a tough business. Yes. The toughest part of this business is you, agent, me. Let me see if I can pin myself here. I don't know if it's going back and forth. The toughest part of this business, everybody, is you getting up in the morning and going outside of your front door or getting up and dressing yourself as if you're going out in the field and committing to a full work week.
Yeah.
if agents would just go out and talk to 15 people a week. We've been saying this for years. If you talk to 15 people a week, the same exact presentation, doing the same exact thing over, you're gonna close 5.
And
when
for
you get
just
good
about
at
anybody, 5 is good enough.
yes, it's a lot of money.
And that's a terrible closing ratio.
That's a terrible closing ratio.
Right? You're only closing a third.
Right, but if you get better, which you will,
Yeah.
right? You're gonna suck, but you will get better. You're gonna close 7 pieces of business.
Yep.
And then one week you're gonna do 8, then 9, then 10. And when the compounding effect between 5 and 7 is like crazy numbers
Oh yeah.
over a year period. We're talking like
gosh.
hundreds of thousands of dollars. Like at this point,
Yeah.
it's ridiculous. All I'm telling everybody is this: the business is ripe if you're a good agent. And a good agent is somebody who is doing proper field underwriting, who is doing the right thing, who is following all proper procedures. If you just learn how to get in front of 15 people a week by, get this, Nick, we're going to say at the same time,
Buy leads.
buy leads,
Oh,
right?
We needed to count 1, 2, 3.
We didn't even need to. We just just
buy
knew it.
leads.
Just buy leads. If you just buy leads, call those people that have responded. And if they don't respond, door knock them. Do whatever you can in the 40 hours of work week that you have to sit down with 15 people. You can be successful in this business.
Just as a for instance numbers, just because you mentioned it, and I was like, oh, let me do a little bit of math real quick. Average premium industry wide has gone up to being about $60 a month.
I was going to say it's $62.50 was my
about 60-ish. So it's $720 a year.
Mm-hmm.
$720 maybe. If you're writing 5 apps a week on average consistently, 52 weeks a year, that's $187,000, right? Which is pretty good. You're getting advanced. Maybe you got 120% contract. You're getting advanced 9 months. You're bringing home, after advances, you're still like pocketing $187,000. That is a good living by anybody's standard. If you can get to 7, right, where you're closing,
watch this, yeah,
half, 2 more apps a week, a week. $262,000 of AP.
Do y'all see the compounding effect that I was talking about? I've been telling people this for years.
It's 2 more apps.
It's 2 more apps. You just have to suck a little bit less. You're going to suck when you first start this business. You're going to suck. Everybody does. You just suck a little bit less every single day or every single year that you're in this business. And then all of a sudden you're closing more business. This business is one that will perpetuate your level of success if you just stay in the game and you're consistent in what you're doing.
And so in order to get there, you only need to talk to 3 people a day, 5 days a week, and close half of the people that you talk to.
Right. And so this is how I recruit from any organization, not from insurance agents, but from any other organization that's not insurance. I go, look, man, if I told you all I want you to do is talk to 15 people a week and you have 40 hours to do it, I'll pay you $100,000 to do it. Would you do it?
Yes.
And Nick, I'll give you the people that want to talk to you. I'll give you 30 people that want to talk, and you only have to talk to 15 of them.
Fantastic. Yes. Give me $100,000 to do that. In fact, give me $262,000 to do that. Right. I will do that all day long.
Right. But most people say, yes, I'll do it for $100,000. And I go, okay, great. I'll pay you $100,000, but I'm going to show you what the math looks like if you were to do it yourself.
Yeah.
And then they go, that's all I have to do. And I'm like,
yeah.
I'm telling you, that's it. Like, now it's going to suck. You got to do a presentation. You have to do this thing. You're going to have some gas and all that stuff. There's things that go on in the business. But at the end of the day, final expense hasn't changed.
No.
The people need help. They're worried, right? Because people pass away every single day. It's still a real thing. If you've never seen, as an insurance agent, if you've never seen what peace of mind looks like, and Rusty was telling me about this, handing over that insurance policy and them having peace of mind that they no longer have to worry about this. That's when you give that to a person, you can see it in their face. That's when this business becomes real. Or when you have your first death claim.
And here's the other thing, like, because this was just on Facebook and I was kind of talking to David Duford about this a little bit. Because he posted a thing about, direct mail return rates are down, is direct mail dying? And everybody's always, the sky is falling. And I feel like at this time of year, the sky is always falling.
Yeah.
But people are bored. It's the summertime. Kids are out of school. I don't know. The sky seems to fall more in June and July than it does at other times of the year. But let's say you're averaging $45 a lead, which is higher than most people are paying. But let's say you're averaging $45 a lead and you're trying to get 30 leads a week. That's still only $70,000 a year. It's fucking cheap. If you're going to gross $262,000, and you're telling me that you're going to net $190,000 before your pay through starts, before you start getting your as earned money.
Renewals. Yeah.
And your as earned money and your renewals. This is just what you're being advanced. Matthew Murray, would you pay $70,000 in order to be guaranteed to get $190,000?
Every day of the week.
Right. Why would you not do that? Who would not do that? Who would say no?
I was thinking the same thing when it comes to Medicare. I said, would you talk to somebody? Would you talk to somebody for what was the word? It was like, would you talk to somebody 5 minutes a week, or 1 hour for one time, and then 5 minutes a week to make $20 a month from that person? That's Medicare. That's Medicare.
Absolutely. That's what.
That's Medicare.
Yeah, absolutely.
That's Medicare 101. You sit with the person, make sure they get the right thing.
Yep.
Once a month, you call them and go, everything good? Yep. How's Bebe's kids? And they're good. Any questions with your insurance? Nope. All right. Have a good one.
Yep.
That's Medicare 101, guys.
Yep.
It's so tailoring that with final expense. You make your upfront money and you make your back end money.
With the changes to CMS, every 100 clients that you add to your Medicare book of business, every 100 clients you add to your book of business is $35,000.
It's wild.
It's a huge amount of money. 100 people is not that many.
Wild.
100 people is 2 people a week. It's just not that many.
And if you sell, get this, 5 final expense policies a week,
2 of them are going to be Medicare clients too. If you ask, all you have to do is say, hey, do you want to talk about Medicare at some point? You can't actually do it exactly like that. That's not compliant. But basically, right? Right, like do it in a compliant way. But like let them know that you help people with Medicare, and like talk to them about their Medicare. 2 out of 5. That's all it takes. $35,000 extra dollars on top of the $190,000 that you just made on advance before pay through.
It's right there in front of people, and they still don't want. They still don't.
Why don't people want to buy leads? Why don't people want to buy leads?
Dude, as a guy
wants to buy leads.
As a guy who recently started selling leads after doing this for 6 years, I still find myself convincing people why they should buy leads.
You know what I think it is? I think people haven't adjusted to inflation yet. Like
insurance agent haven't adjusted
mentally.
to inflation. Yeah.
Mentally, they haven't adjusted to inflation. They still want leads to cost $26 a month, the way that leads cost $26 a month into a lead in 2014.
Yes. And I wanted this to cost $1 when I went to Walmart today. It cost me $2.25.
Yeah, it doesn't. Right. So, like, I'm just out of curiosity. This could be really embarrassing. Let's see. Inflation calculator by year. Bureau of Labor Statistics. That seems like a fairly
reputable source. Yeah.
Yeah. So let's say 30 leads a week, $26 a lead, times 30 leads a week, times 52 weeks a year. So we'll call that $40,000 in lead spend.
Yep.
in 2014. So the cost of leads is outstrip it. Like if you're spending $45 a lead, that is outstripped inflation by a little bit. But if you were spending $40,000 on leads in 2014, 10 years later, you should be expected to spend $55,000 for that same number of leads. Yeah, okay.
But if you've been doing this for 10 years and you have any amount of renewals,
you should be able to afford to spend a little bit more. So like, but that's like, but $55,000 for those same number of leads. Yeah, that's about right. So it's a little bit more expensive than that. You're going to have to pay like $68,000 instead of $55,000. That's on a week per week basis. That's not that big a change. That's $18,000 difference over the course of 52-week year, right?
Right. But let's go back to the math here. The average premium has increased.
Average premium and let's do this math.
Yeah, let's do the math real quick.
The average premium used to be $450. And now it's $720. So $450 in 2014. Let's see. Oh, only 603. So average premium has outstripped inflation also. Right? Everything's kind of going up at the same time.
It is all going up. That's what inflation is for people that don't really know.
And it's not right. And it's not like 1-to-1, right? It's, like, I don't know. I feel like that's pretty darn close to not being that much different. The cost of leads has gone up a little bit faster than inflation. The cost of funerals has gone up a little faster than inflation. And the average premium of a life insurance policy has gone up a little faster than inflation. And boy, howdy, those all match together.
Yeah. I mean, it's just...
Yeah, you used to get away with spending $40,000 a year. Now you probably have to spend 70.
Right.
You used to have an average, of like $120,000, $20,000 of AP if you were only closing a few people, and now you can have, or of net income if you're only closing a few people, and now you're going to have 190,000. Same thing.
Yeah, it's what inflation is, man. I've seen it since 2015, 2016, whenever I got in. I can't remember when I get in, but I've seen it go up over time. I've just studied the numbers.
Yeah.
But at the end of it, and again, we'll say this again, the thing is still the same.
Yeah.
Buy 25 to 30 leads a week.
Yep.
Talk to 15 people.
Yep.
Close 5 to 8 pieces of business.
Yep.
Depending on your skill level. That's what it is.
Get leads any way you can.
Get leads any way you can at this point. And
direct mail leads are still best. They're more expensive. I mean, like $45 a lead, I think, is actually pretty on like target for what a direct.
Yeah, pretty on target.
Like,
I was actually talking to Tim Ritchie, if you know who that is, from RGI.
Yeah, sure.
Yesterday, and it's about on par for final expense right now. But guess
RGI
what?
can still get you leads for less than that sometimes. Depends on where you live.
Depends on the market and if it's available. That's the other thing with RGI.
But like RGI is not the only game in town, and they're not the only people who have leads that return. And that's about what leads are costing now, and that's still cheap. Like, again, spend $70,000 to make, call it spend $75,000 to make $200,000. Let's make the numbers nice and round. I would spend $70,000 to net, after my expenses, $200,000 every single day of the week.
Why? Because you know that you'll do the work involved to get there.
Because I know I'm going to get the 200,000, right? So the people who don't do it are the people who are afraid that they're not going to be able to get the 200,000. Right? And so you don't do it because you think, oh, well, that works for Nick. Matt just said he's the greatest insurance salesman of all time. Those are not my numbers. My numbers are a little, but
the numbers are up.
But those are not my numbers. Those are industry average numbers. You should be able to do that.
Correct.
If you're watching this, you can do that. You can be making $200,000 a year.
All you have to be is average.
Yeah.
You don't got to be great. You just got to be average.
And I'll tell you, maybe you're below average. you'll probably still make $150,000. That's still pretty good net before pay through.
Yeah. Well, Nick, this has been fun. This is a good.
I don't know how we got ranting about leads again. We always end up getting ranting about leads.
Well, it's the lifeblood of the business,
Yeah.
and you need to learn what leads is and why it's so important to your business.
It's true.
Nowadays, because I understand networking and marketing myself, I can sell a lot more life insurance without leads. But if I go out in the field, I'm making leads or I'm buying leads. I'll still buy leads from direct mail companies. Even though I know how to make my own leads on Facebook, I still would rather do direct mail.
All day long. Unless you're doing telesales.
Yes.
You're doing telesales. Everything is different if it's telesales, right? This is all like, hey, guys, go sell face-to-face. It doesn't mean that telesales is not a valid way to do business and that there aren't people out there who need assistance and help doing telesales types of things. And since the pandemic, I think Matthew and I have both gotten somewhat savvy about telesales.
I've helped build multiple call centers and done tons of click to calls and YouTube leads and all different types, just going into that direction. So it's like, if anybody gets it, it's us, right? I mean, Nick, I remember Nick during the pandemic. If you go watch some of the videos that we did during that time,
we have videos of me learning how to do telesales.
Yes, like legitimately going like, this sucks. I hate this so much.
Yeah,
but he was doing it, but we realized is, I'd rather be in the field.
Yo, for sure. But still do it. Still do it today. I was doing telesales earlier this week because sometimes like my time, worst problems to have, right? Like there are so many pulls on my time that if I'm going to try to do any sales, sometimes I don't have the ability to leave my house to do it because I have to be on a teleconference and then I have to go do this other thing and I need to be at my desk and like, so this is my life. But I spend way more of my time than I ever thought I was going to doing telesales. And yeah, right. Like I've taught other people how to do it. I've written telesales scripts for other people at this point. I've had people become extremely successful off telesales scripts that I've written. Like we're like, it's a viable business model, and maybe we'll talk about it again more in the future. And maybe we can even have a guest on who has more credibility than either one of us do, because they like it and we don't. But
Ramiz Hakim, where you at, buddy?
Yeah, so we can get Ramiz to come back on. He's one of the people who responded to the video that Chris and I did, saying like
I saw it.
He likes what we said, but disagrees with some of it.
Sure,
and I would love to have his thoughts. But like let's get doing this like for serious, and let's take a holistic look at the business and the industry and what's going for folk.
Let's do it, guys. Welcome back to the insurance panel again.
Every time it's welcome back.
This will be up tomorrow, which is Friday, which is 6/7/2024. Woo-hoo. Y'all be great. Don't do anything we wouldn't do, but if you do, name it after us, the insurance panel.
See you guys.